Okay, this is an interesting one. My good friend and colleague grew up with me in the Bronx. Irvin Rodriguez. He created our website. He's an artist in his own right, and he didn't want to take payment. He wanted to take a espresso machine. Now, that espresso machine costs money. Is I'm gonna be able to deduct the price of that espresso machine that I gave him as payment for the website.
Oh, you paid him for his services with an espresso machine?
Yes.
Oh shit, that's creative.
That's
But
what he
that
asked
loses
for.
value through the year. How old is it?
I don't even fuck. I paid $5
Literally,
espresso
bought a
machine and
brand
gave
new
it to
one,
him.
right? You bought a brand new one and gave it to him?
On Amazon, I have my receipts. This is my. So I have a business partner. When he tells me to buy shit, I'm like, find that shit on Amazon, because I ain't trying to save none of these receipts. Make it easier for me. So I basically paid for our website with an espresso machine.
If I'm preparing that tax return, I'm going to take it.
Yeah.
Yeah.
Yes. Okay.
But I am preparing that tax return.
You
so-
are.
Yeah.
All right. Film crew for both episodes. That's good.
But you're going to 1099 them. They don't like to hear that.
1099. Yes. 1099 the one person operating all these equipment. All right. To get something out of Ev's way, because I know he was feeling about the box in front of him.
I like a clean
There's
table.
a business cards, box of business cards. They're kind of a little shitty. I've been throwing them out. Jersey swag. One side is not
Can
that.
I have one, please?
Yes, you should have a minute.
Pass that down.
Yeah,
Take
take
a whole box.
not a whole box.
I said one.
Someone make that look reasonable.
Yeah, take all of it.
I would think these is reasonable expense. Try to share the brand. Yes? No?
Yes, this is.
Need business cards.
Making sure. Just laptop.
Okay.
Not laptop. Surface. I came up with this idea, and I realized to develop it, it would be very hard using my home computer. So I bought this specifically for the business.
Okay, so it's specifically for the business.
I bought
100%
this specific-
business use, right
That
there.
means that there's no personal material on there?
This is what I would say is if there's personal material on my old job's desktop or laptop, this doesn't have a higher rate of that. You know, everyone goes on YouTube and watches YouTube videos at work. So I'm not doing that at
At the
any
public
higher rate.
defender's office.
I'm not doing that at any higher rate. I do a lot of work on this. A lot of work.
So yeah, if it's 100% business, it's going to be ordinary necessary. The thing is with stuff like that, listed property, it's going to be, you know, if you're using it for personal use and business use, let's say you have a car or something like that, where you're using business, personal, what you want to do, and it's like I do it with cell phones a lot for like small business owners that use their phone for personal and business, is you prorate it. You're gonna be like, okay, how much of this phone are you using for business? How much are you using? And it's an estimate, you know.
Okay.
But if it's 100% for business, it's gonna be deductible. Now, something like that, that's the question is, are you gonna you're gonna get that for more than 1 year? That's something you probably capitalize. And if you don't make money this year, you're gonna depreciate it. If you have a profit, you take this 179 deduction. So depending on how the things look at the end of the day.
Why would I want to capitalize it?
Because you get it for that thing is going to last you for multiple years.
Okay.
So the concept is that you're not supposed to take the expense, front load it. You're supposed to take the expense like over the life of that asset.
Can you front load it if you want to?
So there's this thing for tax purposes is a 179 deduction, which is like I think it's up to like $1 million. But you have to have income. Like if you're a striving business and you buy assets. And you're allowed to write it off that first year if, it's called the 179 deduction. But I'm pretty sure that if let's just say and a lot of businesses lose money the first year. If you don't have that income, you're probably I think the right way to do it is you capitalize it over probably 3 years or 5 years or whatever that thing is.
I bought so there will be T-shirts available at the premiere event. I think that's easy.
T-shirts.
T-shirts. That's good, right?
Well, what you're buying the T-shirts and you're just gonna give them away, right?
No, we're selling.
So,
I'm no sales tax expert, but like I feel like you might want to just give them away, maybe.
nah, we ain't giving them away.
Well, no.
You see what I'm saying?
All right. So, no. This
It's something you might want to think about.
Okay, so I
Is
get
it
what you're
going to
trying
be
to say.
subject? Do you have to withhold sales tax or remit sales tax if you sell?
Oh,
these
okay. So
T-shirts?
because
if you just gave them away,
there was a cost that I wanted to deduct, but that cost is
maybe you sell a ticket and you give the T-shirt away.
Or we give them a T-shirt and ask for a
No.
donation.
No. The funny thing is, the funny thing is, no, you're right. So
Once in a while, I am.
no. So what's so funny is Actually, you're making me think clear. So people who come to the Premier event, if they buy a ticket, they're getting a shirt. So you're saying the ones that are given away, I can deduct those, right?
Yeah.
But then we're gonna have
Straight up, it says attorney was flag all over.
Yeah.
That's deductible.
Then we're gonna also sell shirts, and those sell shirts, they might not be deductions.
What I'm concerned about is, and again, I'm not I help people that have issues with New York State, like after the sales tax audit, or they owe money, or but like before you do stuff like that, you gotta just see if you're gonna start selling merchandise, is it subject to sales tax? And if it is, and you want to collect and remit sales tax, which is fine. It's not the end of the world to do that.
But can you deduct the cost of just having the items
Yeah.
produced?
So whatever the T-shirt costs, that's going to be a cost of goods sold or an expense, and then
Okay.
you're going to sell it. And you're going to hopefully you make money off of it.
Oh, okay. So I can deduct
So it's going to be like a net almost. Like if
Yeah,
it was
yeah.
$10 for the shirt, you sold it for $20. It cost of goods sold, so it would be a $10 profit.
Okay, but I can deduct the cost of making the shirts.
Yeah.
Okay. All
But
right.
I'm concerned that if you're supposed to collect sales tax and you don't, and then you might get away with it, but like
No. Well,
just-
I will collect
just
sales tax.
Just see if you have to. Let's look
Okay.
into it.
So actually, these goes together. This is a projector. I bought this because, like I said, HR team is going to ruin this company one day. But until they get here, I do a lot of business meetings in bars, a large number of business meetings in bars. And what I thought was like I'll be more effective instead of just fucking popping up my fucking shit and just showing it to my peoples. I could just plug it in and just fucking grab a wall and then start projecting and shit.
In a bar.
In a bar. This is basically to make me an effective presenter to my team. That's literally what it is. It's just tax deductible.
If it's ordinary and
I think so.
necessary,
If it's
right?
ordinary and necessary, that's going to be my answer to everything now.
Okay. It's good. At our initial launch event in which we launched the trailers, we had a section in which you can like take pictures with the backdrop banner we had, and we had it lit up by like a backlight, right? So it's right over there. You can see it over there. It's a big backlight thingy.
Oh, I see it.
Okay. Now, if I bought that, would that be deductible?
You might have to capitalize it in theory. It looks like it's something that you're going to have for a while, but is it for the business? I mean,
Yes. Yeah.
okay, I mean, sounds
All right.
ordinary, necessary to me, right?
Okay. So now, what if I rented it? How would that work?
You're paying money, right? Yeah, it would deductible. You're renting equipment.
And
I see that all the time.
the
Equipment rental.
The fee I rent would be what I deduct.
Yeah, the amount you paid. If you let's say you rented that for a shoot for like $50, you'd get a $50 equipment rental would be deductible.
Okay. Now, my friend lent me that, right?
Your friend lent you that.
Lent me that. So I'm
Okay.
assuming they have nothing to deduct because she lent it to me.
You can't deduct something if you didn't pay for it.
Okay. Now my question is, and obviously this is IRS. This is for example purposes.
Hypothetically.
If I rented that backlight for $30, right, and I handed her $30, and then I deducted that $30 and got my tax equivalent return on it.
Got a deduction.
Got a deduction on it, right?
Tax benefit.
And then once I got that tax benefit, because she's my friend, I'm like, give me my $30 back. Would that be okay?
No.
Why not?
Because do I have to explain it? I don't know.
You do have to explain it.
I don't know why, but it doesn't sound right.
I know it don't sound right. But obviously, what I'm willing or not willing to do is not the point, right? I want you to explain exactly. I guess what I'm trying to say is that sounds
Did you
very easy
willfully to plan this out to take a
Yes.
$7 deduction, get a $7 benefit? I mean, come on.
This is a hypothetical.
So I think this
I guess explain the logic why that's wrong, so the audience can understand.
because you're taking a tax benefit
Uh-huh.
and
You didn't pay anything. I guess.
at the time he paid
Yeah,
it
but then he took the money back. So in essence, he didn't pay.
In theory, and this is something like you would see with state income taxes. Like if you pay, you get a federal deduction for state taxes. Trump had a $10,000 deduction cap, a SALT cap. So forget Trump for a second. Like go back to old law. You would get a deduction for paying state taxes, federal deduction. So you paid state. So if you let's say you paid in $30,000 at 12/31. you're entitled to a $30,000 state and local deduction, right? Now, when you file your state tax return, if you were to get a refund back, next year it would be income to you. Basically like a recapture. So in a
Okay.
situation like that, like if you're either gonna amend to do it right, you're gonna amend the tax return, which no one's gonna amend it for $7 or $30,
Okay.
or maybe try to recapture it, add it to the next year.
So
Or
basically,
do
there's a way-
nothing and just
There's a
cheat
way
the
to
government
do
for
what you're
$7.
describing that isn't tax fraud, and then there's a way to do it tax fraud.
You could amend the tax return.
Got your bitch. Swag, 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 swag. Attorneys with swag, 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 swag. Attorneys.